Welcome back to this week's Market Outlook. This is the final week for the month of January. Time really does fly really quickly. Let's take a look at last week. We don't actually have a much productive week in terms of market movement in the Forex market at the very least. All the attention are pretty much in the equity market. So we'll actually do a very special outlook on the equity market as well for today. But let's take a look at last week. Bank of Japan, pretty much still dovish. Manufacturing numbers all improving across the board. I think we're looking at a little bit of a drop in services numbers from the Euro side. But that's pretty much it. The UK numbers, the US numbers all are really good. We have the ECB as per expected. No changes. We don't actually have any new comments coming out from the ECB that could actually impact the market significantly. The US advanced GDP numbers, quarterly advanced GDP numbers, this is still much higher than what the consensus is. To think again, the consensus for this one here is at 2%. The previous number was at 4.9%. We actually got 3.3%. So overall, it is still much higher than what the consensus is. It's still a very good number for the advanced GDP numbers for the US. And that's pretty much it for last week. This week, though, very interesting. This is actually going to be the first week where we actually have huge fundamentals in one whole week. There's obviously the JOLTS job opening numbers, which is shifted now to Tuesday. And then we have the Australian inflation numbers, and then we have the interest rate decisions from the FOMC. We're not expecting a rate cut, we're not expecting any changes, but we do expect the statement to be tweaked. There are going to be wordings that's going to be tweaked, and this is actually very important because FOMC is probably going to lay down some groundwork and probably take into matters in terms of the consensus on the more aggressive rate cuts in 2024. So the market is kind of waiting to see if the FOMC is actually going to agree to what the market has been pricing in, or the FOMC is likely going to be hawkish. So I'm leaning towards more on the hawkish side, but again, I've been more on the hawkish FOMC compared to what the market has been pricing in since last year. So we are likely going to get some guidance, at least for 2024. It's in the first quarter of 2024 where the market is actually going to take the FOMC's pricing in. I don't think there's actually going to be that aggressive rate cut, but again, that confirmation is going to come in on Wednesday. If you're in Australia, it will be Thursday early morning as well. All right, and then we have the Bank of England monetary policy decision, and then we have the ISM manufacturing PMIs coming out from the US. And the Friday, obviously, first Friday of every month, we have the NFP numbers. We have the US employment numbers to be posted on Friday. So unemployment rate is expected to pick up a little bit from 3.7% to 3.8%. NFP numbers are expected to come in at about 177,000 gains. Again, look, previous months we've been getting a little bit of a surprise to the upside for the NFP numbers. We'll see what happens here. But for now, we're looking at 177,000 there. Previous months was obviously 216,000. That was way above the consensus. So it'll be interesting to see if we get a revision, downward revision from the previous month as well. So a lot of stuff happening on the fundamental front. This is going to be the first very important and probably the busier week for 2024 that we had so far. Obviously, we only had 4 weeks in 2024. But this week, considering how impactful these fundamentals are, we do expect a breakout to finally happen, especially in the currency market. And to add to matter on hands on this one here, this week we are actually going to get a lot of very important earning calls for the US stock market. We've got Google, we've got AMD, we've got Microsoft, Pfizer, Novo Nordisk, Boeing, Meta, Amazon, Apple, Exxon, Chevron. All of them are actually going to have their earning calls this week as well. So it's going to be a super busy week, no matter what market you're looking at. Okay, let's just jump in on to the technicals. We don't actually have any progress. We're still trapped here for the Australian dollar here. We are still trapped between a order block and a fair value gap, pretty much at about 65.50 to 66 cents. So range wise, it's still going to be between 65 cents to 66 cents on the Aussie USD. Now, Euro USD, we do see a little bit of an improvement. Now, we've been talking about the range between 1.0850, 1.09. as long as price is traded within this range, it's actually going to be really tough, and there's actually a lot of resistance. So we have that resistance playing out, and then we have that rejection. Now we are opening the wick below 1.0850, but this is still within the Ishimoku cloud, so I'm leaving it there for you guys to see there. We've got 78.6% Fibonacci retracement as a support, pretty much at about 1.08. So the pressure to the downside is there, but we're just not looking at a quick enough movement. So it might seem like it's moving in a range-bound market condition. It's not. It has actually broken through below the support area here for the Euro USD. Pound USD, pretty much still flat. 1.27 is still very sticky. We're just looking at price bouncing in and out of 1.27. We don't actually have that progress above 1.2750. So pretty much the order block up top still holds as a strong resistance. So we got 1.27 at this point in time. Momentum wise, we're looking at a little bit of an uptick on the RSI here, but overall still points to the downside here. So yeah, there's still a lot more pressure to the downside, but the situation is slightly different. Unlike the Euro USD, it's inside the Ishimoku cloud. The Pound USD is technically still above the Ishimoku cloud, and in terms of if it does get pushed down lower, potentially towards 1.26, 1.2550, that would just still be just halfway through the Ishimoku cloud. So we're not expecting a complete reversal on the Pound USD, even if there's that pressure downward. We're just not looking at it right now. This is a very tight market for the Pound USD. In fact, throughout the beginning of 2024, I've already mentioned that the Pound USD is actually one of the tougher currencies to trade at the start of the year. All right, next up is the dollar Japanese yen. Dollar Japanese yen with progress above 148. In terms of how far down it's gone, 147 has proven to be a stronger support for the dollar Japanese yen. So previous resistance between 147 to 148 is now acting as a strong support for the dollar Japanese yen. In terms of progress on this one here, if 147 holds, how far can it go? We're currently looking at 149, 150, and potentially towards 151 for the dollar Japanese yen. All right, next up is gold. And for gold, very similar to Aussie USD here, we are kind of really trapped for gold here. So we got the fair value gap from December. That's holding as a support. We also have a new fair value gap pretty much that started on the 15th of January. And you can see where price is currently in. It's currently between those two fair value gap. We're not looking at any progress for gold here, but the FOMC statement that's going to get released this week, this will actually move gold out of the current range. Now, obviously, that would depend on whether or not the tone for the FOMC is hawkish or dovish. But if FOMC sounds a little bit more hawkish, and we are expecting gold to actually plunge downwards below 2,000, if the FOMC kind of agrees with the market that, yeah, they might actually start doing the rate cuts a little bit earlier, or potentially more rate cuts in 2024, then yeah, I think it would break above 2,050. It will probably run towards 2,080 for gold here. But I'm leaning more towards the potential of a hawkish FOMC, and we are likely leaning for a potential drop on gold here this week. All right. Lastly, we've got Nasdaq, and the reason why I want to bring out Nasdaq, if we saw the stock rally that happens in 2023, not both, but it's in the S&P 500, the US 30, as well as Nasdaq. The rally that happened in 2023, about 60% of that rally is actually contributed by just three stocks, and that's Microsoft, Meta, and Nvidia. Now, out of those three stocks this week, Meta and Microsoft is going to have their earning calls, and we are looking at a potentially positive earnings for Microsoft at the very least. And Microsoft, considering Microsoft is basically the largest company in the world right now in terms of market cap, so this could actually lift the Nasdaq a little bit higher. Now, if we take a look at what's going on from a technical perspective, from what we saw, we do have that fair value gap pretty much about 17,000 to 17,200. And if this area holds as a support, if we take a look at the new pivots that we have, I do have that Fibonacci there, and that's more of a reference point that we have actually reached 161.8%. But if you take a look at the weekly pivot here, the resistance 3 is located at 18,000. Now, we just broke 17,500 last week for Nasdaq. The next goal for this one here is that we actually don't see a lot of profit taking happening at 17,500. Slight profit taking, yes. So it seems like the market is probably going to lift off a little bit higher. We actually don't find a lot of strong resistance at 17,500. So I think the next step for the market is actually to aim for that 18,000. Now, obviously, we've got the earning calls for Microsoft. If it's really positive, it could actually lift up the US stock market, including the US 30, the NASDAQ, and the S&P 500. So currently for just a reference point, this is the NASDAQ. And for NASDAQ, we are expecting this one to be lifted likely towards 18,000 if we have positive earning numbers from Meta and Microsoft this week. Okay, so with that, good luck for trades, and I'll see you soon.